Welcome back for another update episode on my small account margin portfolio, where I'm trying to turn $1,000 of Robinhood's money into $1,000 of my money. Nothing I say on this episode or on this channel is financial, investing, or any other kind of advice. You need to do your own due diligence for your investments. My portfolio value was essentially flat this week, technically down 0.08%. I had been up over 1% earlier in the week, but everything fell off on Friday. My margin maintenance is still looking good. I'm in the low risk category and about 10.5% above my maintenance threshold. And for this account, 10.5% is looking great. Outside of this experiment, I would be nervous having my maintenance that low, but that's a personal decision for everyone who's using margin. My buying power is at $16.78, so it's almost tapped out. Let's take a look at the margin details. I'm getting $1,000 of margin interest-free because I'm a Robinhood Gold member. I do pay for that, but I use other services from Robinhood. If I wasn't a Gold member, the interest rate would be 5%, which is really good. Let's scroll down and take a look at the maintenance ratios. Most of them are at 25%, with my newest fund, NVII, at 35%. 25% is the minimum, so as a group, these are all really low. Now let's take a look at price return of my high yield ETFs over the last week. This is from May 11th through May 15th. Divi was down about 0.2%. Blocks was down 5.6%. Chippy down about 3.75%. SPY was up a hair. The S&P 500 was down a hair. It's always nice to see SPY outperform the S&P 500. This is just price return. There's a pretty big sell-off on Friday, and that really hurt NVII, Blocks, and Chippy. Now let's check out the dividends I received over the week. NVII paid me $1.74. It's almost 24 cents per share, and that represents about a 43% annualized rate of return. I split the dividend in half, with 50% being reinvested back into NVII and the other 50% going into SPY. BLOX paid me $1.06 at about 11.71 cents per share. Again, that dividend was split in half and reinvested, and Blocks tries to maintain about a 36% annualized rate of return. Chippy paid me $1.92, over 66 cents per share. This 96 cents you see in red is waiting to be reinvested since I have to have at least $1, so I'll be able to combine it with next week's dividend. So if we take a look at the totals, you can see that my NVYY and NVII combination have paid me almost $164. Misty, COIW, HOOW, and now BLOX have paid me $154. The SNOY position that was changed to Chippy has paid me about $95. In addition to that, I've received $83 in PAAA dividends, and those have been reinvested back into PAAA. And I've received almost $12 in SPY dividends so far. So when we add all that up, we can come back over here, and excluding the PAAA dividends, I've received almost $500. Here's a look at everything combined. My current NVII position is down about 16% total. All of my crypto investments that are currently been consolidated into BLOX are down over 69%, but that's actually looking a little better. The position that is currently Chippy is down about 15%. Combine all these together, and the portfolio of my ultra high yield ETFs is down about 42.5%. But then we add in the profit of SPY, and the total combined portfolio, excluding PAAA, is down about 20%. And this is certainly looking better than it did a few weeks ago. If you made it this far, you may be wondering what exactly is my strategy. So I'll quickly go over it for those of you who are new to the channel or who want a reminder. I'm trying to turn $1,000 of Robinhood's money into $1,000 of my money using margin. I need at least $2,000 of my own money to actually utilize margin, and I decided to invest that into PAAA, which is a net asset value or NAV stable ETF. The purpose of PAAA is to act as the foundation. It's solid, the value doesn't drift down, and this will help keep my margin stable. Unfortunately, because of the poor performance of some of my earlier investments, I've had to add a little bit to PAAA. So I've invested more than $2,000 to keep above the margin minimum threshold. I subscribe to Robinhood Gold, which is typically $5 a month, but if you pay yearly, it's a little less than that. I have the Robinhood Gold card. I also used it for the 3% IRA match, but one of the other perks of Robinhood Gold is you get an interest-free $1,000 margin loan, and that's key to my strategy. So I took this margin loan of $1,000 of Robinhood's money and invested $250 each into 4 ultra-high yield ETFs. Those were COIW, NVYY, MSTY, and SNOY. These paid really high dividends, sometimes over 100%, but the NAV erosion outpaced the dividend yield, and I dug myself a hole. The value of my assets went down tremendously, even though I was getting this great yield. I've since consolidated these 4 ETF positions into 3. The ones we talked about already in this episode, NVII, BLOX, and CHPY. I take half the dividends that I receive from these weekly payers and reinvest them back into the funds. The other half I invest into my forever fund, Neosys SPY-I. This is a NAV stable ETF that has a great yield of about 12% and has the potential to grow over time. This is an ETF I think I can hold on for decades. So I'll invest half of the dividends into SPY-I until that position builds up to $1,000. Then I'll turn 100% of my dividends into paying back the margin loan. And if all that works, I'll get $1,000 of Robinhood's money turned into $1,000 of my money. If you found this episode useful or entertaining, I'd appreciate it if you liked and subscribed. And if you'd like to learn more about my small account margin strategy, check out the first 5 episodes in the series. Good luck hunting those infinite dividends. Take care.